Hello dear student, I am Dr. Boraste from Department of Commerce, KTHM College, Nasik. Today I am going to discuss with you our first chapter, that is piecemeal distribution of cash in the subject financial accounting, which is compulsory course for you and which is paper first for first year Bachelor of Commerce for semester first. In the earlier video, we have already discussed the meaning of piecemeal distribution of cash, and here I will discuss with you the practical example of surplus capital method, which is under piecemeal distribution of cash. As we have discussed earlier, for first year Bachelor of Commerce there is only one method, that is surplus capital method, and under this method we will solve the problem of piecemeal distribution of cash. Here we will start the first chapter, piecemeal distribution of cash. First of all, we will discuss about the problem under surplus capital method. Here, problem number 1. Following is the balance sheet of Messrs. A, B, and C as on 31st December 2018, sharing profits and losses in the ratio of 40% is to 40% is to 20%. Here, the balance sheet is given as on 31st December 2018. Liabilities and assets are given in Indian currency. Capital is of Mr. A, B, and C respectively 30,000, 24,000, and 8,000. Bills payable is 30,000. Total liability is 92,000. On the asset side, the various assets are given as sundry debtors, stock, plant, cash, bills receivable as 35,000, 30,000, 20,000, 4,000, 3,000 respectively. So the total liability is 92,000 and total assets is 92,000. The partners decided to dissolve the firm on and the assets were gradually realized as on 15th January, amount of rupees 20,000 have been realized. On 24th February, 30,000 is realized, and on 31st March 2019, 18,000 is realized. You are required to prepare statement showing surplus capital and statement of distribution of cash as per surplus capital method. So, after considering this problem, we can solve this problem by using surplus capital method. So first of all, we have to calculate the ratio. Here the ratio is given as 40% as to 40% as to 20%. That means it clearly shows that the ratio is 4 is to 4 is to 2. That is 2 is to 2 is to 1. So how it can be calculated? Let's see here the ratio. The ratio between the partners A, B, and C is 40%. 40% is to 20%. That means the Mr. A is sharing 40%, Mr. B is sharing 40%, and Mr. C is sharing 20%. When we divide it by 20, it comes as 2 is to 2 is to 1. So ratio comes to 2 is to 2 is to 1. Now we will see the surplus capital. What is surplus capital? It simply means the partners who provided an extra capital. First of all, we will put the balances which are given in the balance sheet. So here in the balance sheet, the problem shows that the capital of Mr. A is 30,000, B is 24, and C is 8,000. Here the capital balance as per the balance sheet 30,000, 24,000, and 8,000. Now we have to calculate, we have to put the ratio. The profit sharing ratio of Mr. A, B, and C is given as 2 is to 2 is to 1. After that, we have to calculate the unit value. What is unit value? Unit value is nothing but the capital balance divided by the concerned person profit sharing ratio. Here, the capital of A is 30,000 and the ratio of A is 2. So, 30,000 divided by 2, it comes to 15,000. In the same way, we will calculate the unit capital of Mr. B and Mr. C. That is 24,000 divided by 2, it comes to 12,000, and 8,000 divided by 1 comes to 1,000. Here the minimum value is 8,000. So it will be considered as a basic capital or base capital. Afterward, we will calculate the proportionate capital. What is proportionate capital? Proportionate capital is base capital base capital into profit sharing ratio. Here the base capital is 8,000. So when we multiply by the base capital by its profit sharing ratio, we will get the proportionate capital. So 8,000 into 2, it comes to 60,000. 8,000 into 2, it comes to 16,000. And 8,000 into 1, it comes to 8,000. So we get the proportionate capital. After getting proportionate capital, we will see the surplus. Surplus means what? The capital minus proportionate capital. Here we can see A row minus D row. It comes as a surplus capital, that is capital minus proportionate capital. So capital is 30,000 and proportionate capital is 16,000. It is in the case of Mr. A. So 13,000 minus 16,000 we can calculate by using calculator. It comes to 14,000. And 24,000 minus 16,000, it comes to 8,000. And 8,000 minus 8,000, the balance is nil. So in this way we can calculate the surplus capital. But here the surplus of A and B, it shows. Now we have to find the person or the partners who is proportionately paid over capital, or we can say excess capital, or we can say surplus capital. For this, we have to repeat all the stages, all the steps over here. Again, we have to calculate, we have to mention the profit sharing ratio. Again, we have to calculate the unit capital, then proportionate capital, and at the end, we will get the absolute surplus of Mr. A or B, because C is already nil. So, in this case, C will be nil and we will just calculate between A and B. So next step is, again we will write down the profit sharing ratio. Profit sharing ratio is 2 is to 2 and the share of A is already nil though, so that's why we will not consider it as its profit sharing ratio. The next step is, here profit sharing ratio, the next step is unit capital. So we will see the unit capital. What is unit capital? Unit capital is nothing but the capital divided by profit sharing ratio. Here the capital was 30,000, we divide it by 2, so the unit capital or unit value comes to 15,000. Now we have a capital of 14,000 in case of A and its profit sharing ratio is 2, so we will divide by 2, then our unit capital of Mr. A or unit value of Mr. A becomes 7,000 and 8,000 divided by 2, it comes to 4,000. So this is our unit capital. Now we have to see whose capital is less. So here unit capital of Mr. B is less. So his capital will be considered as a capital as a base. So now we will calculate the proportionate capital. The equation of proportionate capital is base capital into profit sharing ratio. So here base capital is 4,000 and Mr. A's ratio is 2. So 4,000 into 2, it comes here 8,000 and 4,000 into 2, again it comes to here 4,000. Let's see what is the solution. Here you will find the proportionate capital, that is 4,000 into 2, 8,000 and 4,000 into 2, 8,000. So in both cases or in both partners case, the proportionate capital is 8,000, 8,000. Now we will find, or at the end we can find the absolute surplus. So absolute surplus, how we will find? Absolute surplus is surplus capital minus proportionate capital. So in this stage we will minus H row from E row, that is surplus capital is 14,000 and the proportionate capital is 8,000. So 14,000 minus 8,000, the absolute surplus capital is 6,000. So 8,000 and 8,000, balance will be nil. Here simply means the proportionate capital is paid by Mr. A, that is surplus capital. Now you understand that in case of piecemeal distribution of cash, when we consider the surplus capital method, at that time we have to find the person or the partners who paid more capital. Here Mr. A paid 6,000 more than Mr. B and C. Now we will see the priority of payment. The priority of payment as per the balance sheet. Here you can see the liability as only one liability, that is bills payable, which is 30,000. After that we can pay the amount to the partners. So one and only liability is bills payable. So it is third party liability. So we have to pay first for bills payable, that is third party liability 30,000. Then the right of Mr. A is more, that is 6,000. He will get a 6,000 as uh, his absolute surplus capital. Then surplus capital of Mr. A and B. Here we calculate A's surplus, absolute surplus is 6,000 and surplus is 14,000 and B's surplus is 8,000. So when we will give 6,000 to Mr. A, after that in the second step he will get 14,000. Afterward he has to receive less 6,000. That means Mr. A will get 8,000. So he has a right to get 14,000, but already he has been received 6,000 in first step. So 14,000 minus 6 equal to 8. So he will get 8,000 and Mr. B will also get 8,000. So here the ratio is equal 1:1. If there is any cash or remaining amount, at that time all partners will be shared in profit sharing ratio. Let's see the solution, that is statement showing piecemeal distribution of cash. Here it is a statement which shows the piecemeal distribution of cash as per surplus capital method. First of all, you have to draw the columns as date column, and we mentioned the year 2019 already over here. Then particulars, then available cash, how many cash we have available, only 4,000 on the asset side. Then we have to pay the liability, third party liability, that is 30,000 bills payable, and capital is 30,000 plus 24 plus 8. So total liability we have to pay 92,000. So here total liability comes to 92,000. How it comes? 30,000 bills payable, A's capital 30,000, B's capital 24 and C's capital is 8,000. So total of these all liability it's come to 92,000. Here you can see the total 92,000. Now statement showing piecemeal distribution means what? Whenever we receive the cash, we have to pay our liability. So our first liability is bills payable. Now we will pay the bills payable 4,000 because we have only 4,000 and we can pay only 4,000 here. So the bills payable comes to 4,000. We can pay bills payable 4,000. Total liability will reduce by 4,000 and bills payable will be reduced by 4,000. After payment of bills payable of rupees 4,000, the balance will add. Cash will be nil. Obviously 4,000 was in our hand and we pay 4,000, so balance comes to nil. Total liability was 92,000. We paid bills payable 4,000. Actually the payment is 30,000, but we have only 4,000. That's why we paid 4,000. So total liability comes to 88,000. Bills payable 30,000 minus 4,000, 26,000, and here we have not paid a single rupee. Afterward, we have to receive some money, that is realization. Because we was having 4,000 and now we paid, now our balance is nil. Now we can ask for realization. So on the 15th January we get 20,000. So on the next step we will see what happened. On the 15th January, first realization is there of rupees 20,000. Here we got the first realization 20,000 on the 15th of January. So first realization 20,000. Now we have a 20,000. We have to pay rupees 26,000 to bills payable, but we have less money. So we can pay 20,000 fully to the bills payable. Now our next step is to pay the bills payable. Okay, so let's bills payable paid. We was having amount of rupees 20,000 and we pay 20,000 for bills payable. When will we pay rupees 20,000? Our total liability will be reduced and bills payable also will be reduced. Now let's see what happened. Now our bills, after paying a 20,000 for bills payable, our balance will be, cash will be nil, because we don't have cash. 20,000 था और 20,000 हमने पूरा पे कर दिया. Now the total liability comes to 68,000 after minimizing or paid the 20,000 amount to bills payable, and bills payable 26,000. Now it reduced to 6,000. In the next step, now we have a cash of 0 rupee. Now we can call our next realization, that is on 24th February, that is for rupees 30,000. So let's see, or let's call our next realization, that is realization number 2, second realization of rupees 30,000. Now we have 30,000 and we have to pay 6,000 first for bills payable. After the payment of bills payable, we can pay a absolute surplus, then surplus. Okay, now let's go to the next step. Okay, so here our next payment is 6,000 for bills payable. So total liability will be reduced by 6,000 and bills payable will be reduced by 6,000. Now bills payable comes to 0. So in the next step, our balance will be as you can see, cash 30,000 minus 6,000, 24,000. Total liability was 68,000. It comes to 62,000 and our bills payable is nil. Now we don't have to pay a single rupee because it is already nil. Our capital balances are as it is. Now we have 24,000 and we paid the third party liabilities fully. Now it is nil. So we can use this amount for the priority of payment. As per the priority of payment, the first number was bills payable, which is already nil. Now we can pay to Mr. A as his absolute surplus. So we have 24,000 and we have to pay 6,000 only to Mr. A. So let's pay to Mr. A absolute surplus, that is 6,000. 24,000, out of 24,000 we pay here 6,000. Out of 62,000 liability, the liability will reduce by 6,000, and here we are going to pay to Mr. A only, and the amount is 6,000. After the payment of this absolute surplus, our balance will be, the balance of cash available in our hand is 18,000. The total liability is reduced to 56,000 and our capital of Mr. A is reduced to 24,000 from 30,000, while the capital of B and C will as it is. Now we have 18,000. We paid absolute surplus. Absolute surplus was 6,000. Now in the next step, the next priority, we have to pay Mr. A and Mr. B 8,000, 8,000, that is equal amount. Actually, the surplus is 14,000 and 8,000, but we have already paid to Mr. A 6,000. Out of 14,000, he already gets 6,000. That means 6 plus 8 equal to 14. So in this step, he will get rupees only 8,000. And another person, that is Mr. B, his surplus is 8,000. So in this step, we will pay 8,000 to Mr. A and 8,000 to Mr. B. Okay, let's see. We have 18,000 and we have to pay 8 plus 8, 16,000. That means we have sufficient amount of cash. So here we will pay to Mr. A and Mr. B as their surplus. 8 plus 8, 16,000. So our cash will be reduced by 16,000. Total liability obviously reduced by 16,000, and Mr. A's capital will be reduced by 8,000 as well as Mr. B's capital will be reduced by 8,000. Now we have 2,000 because 18,000 was in our hand. We paid 16,000. So our balance is 2,000. In the next step, we will calculate our balance. You can use your calculator 18, or you can calculate manually 18,000 minus 16,000. Our cash balance is 2,000, while our liability was 56,000 and we paid 16,000, that is Mr. A and B 88,000. So our total liability is 14,000. Meanwhile, you can check that you are doing a correct way or not. So 16 plus 60, 32, 32 plus 840, our liability is 40,000. Still we have to pay 40,000. That means we are on the correct path. Now we have 2,000. So the next step is after paying the surplus capital of Mr. A and B. The next step is we have to pay, or we can pay, as per profit sharing ratio, which is 2:1. So we have 2,000 and we can pay 2,000 to Mr. A, Mr. B and Mr. C as in the ratio of 2:1. So 2:1 means what? How much it will be? So we can calculate over here. 2,000 we have to pay into 2 divided by 5. How it comes? 2 plus 2 plus 1 equal to 5, and 2 is the share of Mr. A. So in here the eighth share equals to 2 upon 5, B share equal to 2 upon 5, and C share equal to 1 upon 5. So here A and B share will be same. However, C share will be of 1, that means 2000 divided by 5 equal to 400. So here you can see we pay 2000, our cash will be reduced, total liability will be reduced by 2000, and Mr. A will get 800, where you can see here 800, B will get 800 same, and C will get 400. After this payment we can see the balances of various accounts. So first account, that is cash, we have nil. Now we don't have a single rupee. Total liability is 38,000. Still we have to pay 38,000. Mr. A's capital balance, which we have to pay, that is 15,200, beats same, and C's amount is 7,600. Now we don't have any kind of cash. So let us check, is there any realization is pending? Yeah. Here on 31st March, still we will get 18,000. It simply means that you are getting 18,000. So the third and final realization, that is 18,000. Third and final realization, we got 18,000. Now our third party liability is already nil. So we have to pay all these in profit sharing ratio, as in the earlier step. We have already paid to Mr. A, Mr. B and Mr. C in the profit sharing ratio, that is 2:1. Okay. Now in the next step we will pay all these amounts to Mr. A, Mr. B and Mr. C in the ratio of profit sharing ratio, that is 2:1. Now we will calculate here. Here you got direct answer, that is 7,200, 7,200 and 2,600. We will calculate here. How? The amount is 18,000. 18,000 into 2, that is Mr. 8 share, and 5, that is total share. So out of 5 you will get 2, and Mr. A will get 7,000, Mr. B will get 7,000, sorry, Mr. A will get 7,200. Same amount will be received by Mr. B, and Mr. C will receive 3,600. Here you can see the answer. Now we don't have any kind of realization. This was the final and third and final realization. Now we don't have any kind of amount with in our hand. It means after giving this amount, after the payment, how much amount we can't pay, that is called as realization loss. So after payment of 18,000 we don't have a single rupee, that is our cash account is nil. Still our 20,000 total liability is pending. That means we have a realization loss, and the loss is bear by Mr. A 8,000, Mr. A 8,000, Mr. B 8,000 and Mr. C 4,000. We prepare here the column as total liability. Why we prepare here? Just to cross check that our realization loss is correct or not. See here, the realization loss is 20,000. So 20,000 we can calculate it. Let's check. Mr. A bear 8,000, Mr. B bear 8,000 and Mr. C will bear 4,000. So total of these three partners capital balances, that is unpaid balances, is 20,000. 8 plus 8 16 plus 4 equal to 4,000. Sorry, 8 plus 8 16 plus 4 20,000. So the realization loss is 20,000. In this way, we can calculate the realization loss. Why we calculate this realization loss? Because piecemeal distribution is nothing but the dissolution of partnership firm. When any partnership firm has been dissolved, we have to pay all the third party as well as liabilities, which may be internal or external, or your business own liability, or it may be your business capital. So after the payment of all the liabilities, some amount is there. That amount is called as realization loss, which is unable to pay, which we unable to pay. That is realization loss. With this, I would like to say thank you. In the next lecture, we will see another example.